Canadian housing market has seen a period of cooling with economic headwinds and population shifts weighing on demand. But as we head into those summer months, you can feel the warmth already. Are there any signs of demand picking up out there? Joining us now to discuss is Rishi Sondhi, economist with TD Economist. Great to have you back on the program.
Thanks so much for having me, Greg.
Canadian housing market, I know a lot of Canadians follow it very carefully. We've been through a period now that I think we're not accustomed to of cooling. What is the overall health of the housing market right now?
I wouldn't say it's robust. I would say it's far from that, in fact. Just to sort of give some context around some numbers, Canadian average home prices are down on year-to-date, year-on-year basis, for example, as are sales, pretty much wall-to-wall decline across provinces. So it's not a great market still. Although it is, of course, a regional story when you pull apart the Canadian backdrop, right? So some markets are doing better than others. So, for example, you're seeing relatively strong price growth in jurisdictions like Quebec, Saskatchewan, Manitoba, trend-like price gains in the Atlantic and Alberta. And, of course, it's a pretty well-worn story at this point, I'd say, but bringing up the rear in terms of price gains, or I should say declines, is BC and Ontario.
Yeah. They used to be the leaders. What happened in this market over the last several years that had this reversal of fortune?
Yeah, so it's very much an interest rate story. I mean, there was extremely elevated activity in those markets during the pandemic, and pretty robust price gains, and that was that strained affordability. In the case of BC, BC's already an affordability strained market, and Ontario became very affordability strained, right? So that made them interest rate sensitive. Then interest rates eventually normalized, and that put extreme downward pressure on sales for the past several years as the market's sort of working through the excesses of the pandemic. And more recently, we've had economic uncertainty, we've had softening job markets, we've had falling prices, which are keeping buyers sidelined, right? As they wait for prices to fall further and find a more attractive entry point, right? So we've had a variety of headwinds, cost of living pressures that have kept markets quite subdued. In Toronto in particular, the condo market is quite soft, and it has been for some time now. And that reflects a lot of pressures going on, for investor demand. So there was a lot of investor froth, for lack of a better term, over the pandemic that's kind of dissipated now, and that's really weighing on Ontario's market.
How long does it take for something like that to work its way through in terms of, I think, depending on what side, whether you're the buyer of a home, you probably don't mind seeing lower prices and lower demand. If you're the seller, maybe you're a little bit concerned with what's happening there. Do we feel like we've sort of bottomed on these markets right now?
Well, we don't think we've bottomed as yet. And I'll take BC and Ontario because we were talking about them. We don't think we bottom out from a price perspective yet in those markets. We think there's further downside for prices in 2026 in both of those regions. That's largely because markets favor buyers from a supply-demand perspective, right? So there's the intensity with which demand is chasing a given level of supply is not that high, right? So in that situation, buyers have more power in negotiations. They tend to see soft prices. So that's kind of the situation right now in those markets. So we think prices will continue to fall in those jurisdictions in the back half of the year. Although we are thinking that 2027 will be a bit of a better year, not a great year in terms of price growth, but a stronger year for those markets. We do think that the economy, both economies in Ontario and BC, will have a bit of a better year next year. We'll be another year removed from the initial sting of the trade war with the U.S. That should help from an uncertainty perspective. Falling prices, the other side of falling prices is that they do help affordability, right? So affordability has improved quite a bit in those markets since the end of 2023. So that should help stimulate demand. And of course, there is probably some pent-up housing demand in those markets because population growth has been quite robust. Notwithstanding the past little while, it's been robust over the past 10 years or so, and it's really been immigrant-driven. And immigrant homeownership rates tend to rise with a lag. So, some chunk of the people that have come over the past 10 years should be propping up demand for housing moving forward.
You mentioned Toronto condos earlier, and obviously we know there's been a deep chill in the Toronto condo market. What's happening there? Is that because we keep hearing about the fact that Canada does need more homes, and that even though our immigration levels have, I think, not pretty much just leveled out. So we took away some of that demand, but still, we know structurally we're going to need more housing. Is it just not the right kind of housing for the market right now?
Yeah, well, particularly in the condo space, I would say that that's sort of an apt characterization, right? We know that demand is quite low, right? So if that's the right type of stock that people would want, then you'd obviously see sales levels be a little bit higher, right? But they're quite depressed in the condo space, and that reflects general sort of economic headwinds, cost of living pressures, and certainly the pressures that investors are facing, higher carrying costs, falling rents as a function of soft population growth. So they're listing their properties. You're seeing this boost in supply, right? That's been characterizing the market, or this elevated supply that's been characterizing the market for the past few years. At the same time, demand is quite depressed. suppressed, right? So you have elevated supply, weak demand. Economics 101 would tell you in that environment prices would fall, and indeed that's what they've been doing over the past several quarters. We think there's probably more downside for condo prices through this year, and even sort of maybe the first half of next year before we see some stabilization. So, all in, we're looking at maybe about a 25% or so peak to trough decline in condo prices from their 2022 peak through the first half of next year. So a pretty sizable decline in terms of peak to trough, and in line with what we saw sort of in that late 80s to mid 90s, downturn in the GTA housing market.
Is part of this, I guess, when the market you're saying perhaps could recover, find its feet a little more solidly next year, is it the realization that the buyers and sellers are going to come to a place? I remember when the home prices started to pull back, we had such a bull market for so long. I think there was this disconnect between what a seller thought they could get for their house, a buyer thinking they could get it for, and they just couldn't meet in the middle.
Absolutely. We do think there's going to be some stabilization there. We do think that, sellers' price expectations, are going to become more realistic, and indeed have been becoming more realistic because we've seen prices fall, right? There is a lot of pent-up demand out there, right? So, part of it is just the fact that sales levels are so low. Because they're so low, they almost have to go up. They can't go that much lower, right? So when you have sales levels bouncing higher and there's so much pent-up demand in the market, that should naturally put some upward pressure when you have some of the near-term headwinds start to dissipate and the economy start to improve, right? But the important thing I'd say about next year is that we're not forecasting a strong housing market in Ontario and BC, just some modest improvement, right? Driven by pent-up demand, because in our view, there's a fair amount in those markets, right? So it's not a robust market. And to more directly answer your question, we do think that the sellers and buyers and sellers coming together, sort of in a more cohesive manner, a more sort of greasing the wheels manner should help facilitate some increase in sales activity next year.